Roth IRA is a retirement account that has a ton of advantages. So a lot of these advantages come in the form of taxes. And why do you have to worry about taxes when you're buying and selling stocks and saving for the future? It's because if you make over $40,000 in income, you're going to be paying at least 15% on any capital gains tax. And there must be a way that you can save for the future without having the government, reach their hand in your pocket and pulling out every nickel and dime they can from you, right? And there actually is. It's called a Roth IRA. And with a Roth IRA, as long as you're 59 and a half years old when you take out your capital gains, you don't have to pay any taxes on it. It's basically the government incentivizing you to save for retirement. So I should probably clear up a common misconception about Roth IRAs, that just putting your money into this type of account doesn't magically grow it over the course of time. You actually have to invest it within something in your Roth IRA in order for it to grow. And the most common type of investments is stocks. And stocks are a great way to preserve your wealth over the course of time. And I'm going to teach you the safest way to invest it for the long term. So there's so many different companies that you can buy. And after all, a stock is just a small share of a company, right? So if you buy Facebook shares, you're going to have a small share of Facebook. But let's say you put all of your savings into Facebook shares. And then Facebook decides to start charging its users for its services. And no one wants to do that, so the stock goes plummeting down because their profits are down, and now you have all these worthless shares of Facebook. So there must be a way for you to not put all your eggs in one basket without having to actively manage your money. And luckily, there's index funds, mutual funds, and ETFs, which are all great ways for you to diversify yourself against firm-specific risk. So since I personally use Fidelity, I'm going to talk about the index funds / mutual funds that Fidelity has. And the most common one that I've seen people talk about and the one that I personally use is FXAIX. And it all looks like alphabet soup, but the way that this works is you put your money into this fund, and then Fidelity, on your behalf and the behalf of all the people putting their money into this fund, goes out and buys the S&P 500, which, if you don't know, the S&P 500 is just the 500 largest companies in the world. So, well, not the world, in the US, I should say. So if you think Apple, Amazon, Google, Netflix, Costco, Walmart, Target, those are all in the S&P 500. So basically, you don't have to worry about one company doing poorly, like Facebook, for example, like I mentioned, if they start charging their users and they do poorly, because you have 499 other companies that are going to do well for you and continue to grow your money over time. So by putting your money into these funds, you can usually expect around a 7% annual growth rate. At least that's the annual growth rate that's expected from the stock market. So let's look at this visual for a second. Let's say that you put in $4,800 every year and you just buy this S&P 500 index fund, also known as FXAIX. Let's say you start when you're 20 years old, which, by the way, is a great age to get started contributing to your Roth IRA. And let's say you hold it until you're 60 years old, you never sell any of your shares of FXAIX. Altogether, you have contributed just $192,000 of your own money. However, by the time you're 60, your account will be worth over $1 million, about $1.025 million that you can just withdraw tax-free. You don't have to worry about paying that 15% tax that we talked about earlier. This is all your money. And that's one of the great advantages of having this Roth IRA account. And I should also note that by starting just 5 years later, so let's say you start when you're 25 instead of 20, you actually are going to lose over $300,000 in potential gains because your money compounds over time. And starting when you're young is probably the key in this game of saving for long-time retirement. So as I always say, and I know this is probably a saying, but the best day to start investing was yesterday. The second best time to start investing is today. So if you want to start with opening a Roth IRA, I recommend going to fidelity.com and opening an account there. They'll ask you a few basic questions, and then you can enter your bank account information so you can transfer money into there, and you can start trading as soon as the next business day. So I'd highly recommend doing that. And just to reiterate, by just putting your money into this Roth IRA does not do anything. You have to make sure you buy a fund like FXAIX, and I'll link a few more great funds that Fidelity offers down in the description that you can check out as well. And that's all I have to say for the basics of a Roth IRA and diversifying yourself against firm-specific risk. So that's it. Have a great day.